Okay, fam, welcome back. So today we're going to be going over some ETFs and even some single stocks that you could consider buying to create passive income with a wheel strategy and options. And we'll be talking about some other things as well. So with that being said, let's get it. Okay, so first thing I did want to say, I have received my election ballot basically for the presidential election. I will be voting for Trump and JD Vance, even though this is a Democratic state. Because I mean, the bottom line is, there's such a lack of respect among people these days that I think that we need a change in leadership. And usually, I don't pick sides, but in this case, I feel like it's extremely important to make a decision at this point. So um, there's that. And the other thing that I'm going to go over here is earnings. So as you guys can see today, there wasn't really a whole lot that we had in earnings that was significant. I mean, there's a few notable companies in here, like Nucor is one. Let's see what else we got in here. AG&C, but you can see the earnings are not really all that substantial. So just a handful of names, not too many. Tomorrow, however, we're going to get a lot more. So you can see we have a total of 102. So we have some big names like Philip Morris, Verizon, Texas Instruments, Raytheon, Lockheed. I'm pretty sure these two right here are going to do well because of the international conflicts. As you guys know, Raytheon and Lockheed Martin are defense contractors, so they are in the business of war, essentially, is what they do. So I'm pretty sure they're going to beat. Then you got Fiserv, Sherwin-Williams, a lot of big name companies, 3M, General Motors, Kimberly-Clark, on and on and on. So I suspect volatility is going to start picking up tomorrow going through elections. Again, we get our first big tech company on Wednesday, which is Tesla, and then it kind of continues on through the week. So you got 182 earnings on Wednesday, 230 on Thursday. You get Amazon too, of course, and a lot of probably other big name companies. And then going into Friday, it kind of cools down a little bit. Not so many big names. You got Colgate-Palmolive. That's obviously a big one. But then going into next week, so you have 73 on Monday, which again is not that many. The earnings, most of them are likely going to be in the middle of the week. So let me try to get this calendar back up here. Okay, so Tuesday of next week, you got Google, AMD. So we're starting to get into the semiconductors here. McDonald's, Stryker, Chubb Limited, HSBC, Anheuser-Busch, American Tire Corp. Lots and lots of big companies here. And then, of course, on Wednesday, Microsoft, Meta, and a whole bunch of others. And then on Thursday, we get Apple, MasterCard, Comcast, ConocoPhillips, and on Friday, well, we get a lot of others too. So there's going to be a lot of earnings, as you guys can see on these days. So 156 on that day. And then on Friday, we get the oil companies. So basically energy companies. So you get Chevron, ExxonMobil, Enbridge, and Dominion Energy. You have Imperial Oil, lots of oil companies on this day. Cardinal Health, T. Rowe Price, just a lot of companies in general. So that's what it's looking like for the earnings. So yeah, I'm basically pretty much what I'm expecting here is there might be a little bit of bumpiness this week, but then going into the end of this week and through all of next week and going through November, I suspect markets will be going up. It could be possible that we may even start going up this week, kind of just trudging along and then slowly going up and then boom, start popping off next week. Again, because we would be getting into that kind of back half of October and start of November. Of course, the move up could always start this week too. I'm not going to rule that out. All right, so let's get into the ETFs here that we're talking about. So we got SOXL here. So basically, SOXL is pretty much basically what SOXL is it's a 3x leverage semiconductor ETF, and it has a bunch of different names in it. Okay, it has things like NVIDIA, ARM, ASML, Taiwanese Semiconductor, like a whole bunch of different companies that you can think of that are in this name are in this name. Okay, so pretty much anything to do with chips that are made that could be for AI, they could be for cell phones, they could be for laptops, they could be for military craft. They could be for any vehicles, anything and everything that literally requires a chip or some kind of technology would have. Those companies would be in this. So this one is basically, in my opinion, it's a good one to pretty much procure income from because again, over time, and you can see this is a very old ETF. Okay, it's been around since 2010, 2011, something like that. Only recently started picking up volatility in 2018. Not sure why that is. Maybe because semiconductors became more prevalent in society at that point. But the reason why I say I think this is a good one to pick, because generally speaking, it's within a range. Okay, so it goes between $8 to $72. Again, I would only ever want to buy the shares if they're sitting exactly on a support level and they're relatively cheap in comparison to the all-time high. If that was not the case, then I would not want to buy them. I would want to do a cash secured put. So let's take a look and see what that looks like. So you can see up here on the top right, we do actually already have a put on for SOXL. So if I go over here to options, this is always a good indication too of there being a lot of volume, a lot of open interest is what they call it for these particular ETFs. If you have weekly options available for these, in this case you do. So if I were just to go to let's say a 30 delta here, so this is a 30 delta covered call, and this was assuming that we already had the shares. So for one contract, we'd be looking at about $57 a month, or sorry, not 57 a month, 57 a week. That's what I meant to say. And then it would come out to $228 a month. And then again, of course, the options premiums that you're paid are going to fluctuate based on the price. When the price goes down, it's going to be less. When it goes up, it's going to be more. So do keep that in mind. Now, if I go on to the cash secured put side, I believe it's actually more at this point because SOXL is a little bit bearish on the day. As you can see, it's moving around up here. So so the way that options work with selling calls and puts is usually when the underlying stock or ETF is going up in price. That's the best time to do covered calls because the premiums become more significant for a covered call when it goes up in price versus when it goes down in price, the premiums becomes more significant for a cash secured put. So the amount of money that you would get paid out would actually increase if you go with the flow of the direction of the underlying stock or ETF. All right, so cash secured put here is 70 would be what's currently going for the week. That's what we're running right as of right now. We were going to do this on Friday, but again, we had a call debit spread we wanted to close out first and make sure that was all good to go. So $280 on the month, as you can see, are about $70 a week. Now, the goal here over the long run for us is for each ETF that we have that we're running options on, we want to have at least 5 of each of them. Okay. So at least a minimum of 5, preferably at as good of a price as possible on an average price. So in this case, if you can see, if we were just doing cash secured puts on this, again, this is quite a bit of money. So it's roughly about $18,000 just to buy the shares. So double that for the cash secured put, and then it would be that exactly for the covered call. Because again, you don't have to buy the shares when you already own them. You can do the covered call. You don't actually have to buy more. So this would come out to $350 a week, and then again, if I quadruple this, you can see it comes out to about $1,400 a month. So this would not be the only one that we would want to do. Again, you guys are free to do whichever ones you want. There's plenty out there. You have crypto stocks that you can do options on. You have single stocks like the tech stocks. You can do options on like the Mag 7. You can do options on the indices like the SPY, the Triple Q, and the, I want to say it's the RTY. No, IWM, I think is what it's called. Yeah, so you got the Russell 2000 as well, IWM. You can also do options on single stocks like Procter and Gamble, for example. If you're into dividend growth investing and you're interested in that, you can do options on that. We do have a few banks that we're looking at to do options on that. That's not really the focus of this video, though. The focus of this video is more so ETFs and leveraged ETFs is what we're looking at. But yeah, you can see the options premium for this one wouldn't really be all that great. So I suppose maybe if you did it once a month, it would probably be a little bit better. Yeah, so I mean, you'd get your dividends plus you get about 110 bucks a month, assuming the price was somewhere in that, roughly in that price range. But there's tons of single stocks out there you can do this on. You don't necessarily have to do it on something really expensive like Procter and Gamble. Okay, and of course you have your options-based covered call ETFs. If you don't want to do the options, you can always get into something like AIPI or FEPI or YMAG YMAX or SPYT, QDTE, and XDTE, RDTE, stuff like that. If you don't really want to fork over the money to do options, that's understandable. So another one that we're taking a look at getting into. So you can see we have a couple singles here. So we have FITB back. XLF is an ETF or a sector that we're looking at. So the next one on the list for us would be this one, which is the iShares Silver Trust. And you guys might be wondering, oh, well, why would you be taking a look at silver? Well, I mean, it's pretty simple. Silver has a lot of industrial demand. It's used in a lot of industrial things, so there's a lot of use case for it, which means that the price should theoretically go over time. Now, we have said that silver is basically a fear trade in terms of owning the actual metal. It is usually when there's massive uncertainty, risk of economic recession, all that kind of stuff. People will pile into gold and silver um, and cash because they're terrified that things things are going to drop in value, right? Real estate, stocks, all the whole nine yards. I mean, you guys saw what happened in 2020, 2008. I don't think I need to say more about that. So this would be a way to get some passive income off the actual metal itself without actually owning the metal. And of course, we do have silver, but it's just the idea that there's more than one option here. Okay, so 24 delta on the weekly versus the 38 delta. I mean, either one would probably be fine. Silver hasn't really been volatile until lately. But again, if we had 5 of these, which is we'd probably go with SOXL first, but this would be like a second choice, roughly about 90 bucks a week based on the current price. And again, the premiums can always go up or down over time. That's not really the point here. The point here is to create passive income. So another one we're looking at is also, see if I can find it. So TSLL, that's another one that we're also looking at. So if I go over here to the options chains, we'll go down to cash secured put, because again, this usually this is how you would start the wheel. You do the cash secured put, then eventually you get assigned the shares, then you turn around to do a call. They get called away and rinse and repeat. That's why it's called the wheel. Okay, so you can see here a 22 delta for the 20 per week in the premiums versus the 34. Personally, I'd probably go with the 20. Around a 30 is probably good for delta, but or good delta for Tesla. But again, Tesla is extremely, extremely volatile, so I would be a little cautious to do anything over 30. So 5 contracts again is not really that much. I mean, that's like what, 4,200 bucks for 500 shares of this leveraged ETF, roughly about $100 a week. And again, the premiums will fluctuate. That still comes out to 400 a month. So yeah, as you can see, the actual price of the ETF is down today, which means the premiums for the cash secured put is going to be more, or theoretically should be more, than the covered call. It's pretty much about on par, but you can see we had a 24 delta on the cash secured put, whereas and the premium paid out was 20 cents, whereas you kind of have your 24 somewhere in between here, which is between 12 and 22 cents. So there's that. So the next one I'm going to look at here is NVDL. We recently just had this one, but we decided to go with SOXL instead because it gives us some diversity. This one has been a ripper. I mean, it's just crazy. I mean, look at it. NVIDIA's actually finally blown past all-time highs, so that's always good. This one is a little on the expensive side, so I mean, it's 8,000 bucks for 100 shares. That's a lot of money. So you may have to actually work your way up into this one, just buying individual shares or something like that. But you can see the premiums are actually very good. So again, this one is up, so the cash secured put's not going to pay as much, $130 a week, but still 130 a week is 130 a week, right? So it comes out to $520 per month in premiums. Owning Nvidia itself would actually be the better deal, but if because of how expensive Nvidia is, I personally would probably wait for a drop in price to buy it. That's just me. So going over the covered call side here, so the premium on this one is roughly about the same, so 130 a week, and again that would come out to about 520 a month. And if I actually do a comparison here with Nvidia, what's interesting about this is I could be wrong about this, but I'm pretty sure that yeah, you can see this thing is just absolutely ripping. It's up almost 6% on the day, or 5% on the day. So the premiums for this should be about the same, if I'm not mistaken. I think it's going to be roughly about the same. So it's okay. This one's actually a little bit less. So you would actually get more with NVDL than you would with Nvidia. But of course, you can't beat owning the actual company, right? So on the flip side, on the cash secured put, you got your choice of either 155 or 125. 125 is obviously below 30. So there's a couple others that I'd be looking at as well to do options on. These ones, like I said before, what we're specifically looking for is to get these in the crypto bear market. We do not want to get them right now. Again, we do have one cash secured put on MSTU. The reason for that is because we are expecting to collect the premiums. The price of the ETF is going to moonshot in the coming weeks and months because of where we are in the crypto bull run. So the cost of the contract should theoretically get run to zero while the price rises up. We don't have to take the shares, and we get to keep the entire $1,000 in premium, which we usually don't talk about until the weekend. But you can see here the price has pretty much done nothing but gone up, and I'm actually going to show you guys why. I think for us, it's personally not a good idea to pile into these massively. Basically until the bear market, well, you can pretty much see that at the low point here, it was at 24. I mean, do I want to be buying this with a 2x leverage on MSTR at 20 or all the way up here at 60 to 70? Probably not. I mean, again, everybody can do what they want, but me personally, I mean, look, if MSTR, I'll just go back to this just to show you guys how crazy this is. And I know everybody's going to say, oh, Michael Saylor's a genius. Yes, he's a genius right now. He's a genius until the crypto bear market, and I'm not knocking it. I mean, mad respect for what he's doing, but look at this. MicroStrategy last cycle went down 90%, okay? And this was before the 10-to-1 stock split. So it went from 130 down to $12. If MSTU went from, let's say the top for MSTU was at $200 a share, which could happen. That could theoretically happen. And it goes down 90% down to, well, it'd probably go down 95% because, again, it's 2x leverage. But we'll just be generous and say it goes down 90%, okay? So it goes from $200 to $20 a share. Do I want to be holding at $200? Probably not. So I would be looking to personally buy these as close to Bitcoin's bear market bottom as humanly possible. The other one here also, same thing, which is CONL. Again, another crypto-based stock. You can see the bear market lows back here. This was actually during that time was at $4, and the recent peak we just saw, which I think is not likely the absolute peak in this cycle, was $76. So you're talking almost a 20x return. We could have easily bought like 2,000 shares or 1,000 shares of CONL at these lows down here and just held it all the way up here. We would be sitting on stupid levels of passive income and profit right now. So These are monthly options. You're not going to get the choice to do weekly, probably at least not right now until more interest comes into these ETFs. But you can see the premiums are pretty dang good. So, $420 for 1 month, and the ETF itself only costs $34, so it's relatively inexpensive. Going over here to MSTU. So MSTU is obviously, it pays a significant amount more if you don't have the money to actually buy MicroStrategy. Again, this is a cheaper leveraged option to be able to do so. You can see roughly about the 30 delta on the cash secured put is going to be $920 for a month in options premium. So you're pretty much already getting about 15, somewhere between like 10 to 15% of your money back immediately based on the options premium. Which again, today was a green day for this particular ETF. So you're actually going to get paid more premium going on the call side. So, I mean, yeah, you could easily just say, well, you know what, I just want to let it rip, $10 a share, make $1,000 if you have the shares, collect your $1,090 in premiums, you'd be up $2,000 within a month, right? Assuming that would happen. Again, the delta would be a 53 here. It's not going to be a 30 even all the way up at the top because of just how explosive MSTR can be. You can see it's only a 47, but of course, as the price rises, you'll get more strike prices to the upside as well. So just a few different ETFs we're looking at for options premium. Again, we're doing the MSTU one now to basically help further fund future asset purchases because, again, we expect the ETF price to go up. Basically, we expect the ETFs to go up basically as the premiums that we're collecting get eaten away while the price simultaneously goes up. That's what we're expecting to happen here. So, anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.